Most people think that a guarantor loan means that your parents are putting everything on the line just for you, but that's not even true. Your parents don't even need to be working, and they definitely don't even need to give you a cent. In the right setup, you can buy with a small deposit or even no deposit, not pay lenders mortgage insurance, and protect everyone involved all at the same time. Let's say you've been working hard, you've got a solid income, but that finish line of that deposit you're going to need to buy your first home just keeps moving. House prices have surged, and that 20% deposit, that might even take you another 5 years, and guess where house prices are going to be then? A lot higher than they are right now. Now enters your parents. They may own their home outright or have really good equity in that property. They're not cash rich, but one thing they do have is leverage against the property that they own. And that's where a guarantor loan comes in. Now, it's not about being bailed out. It's about using the fortunate position you've found yourself in to accelerate your financial independence, not delay it. And if you're a parent watching this is your one-way ticket to turning your kids' room into that home gym you've always wanted. So really, what's a guarantor loan? It's when the bank takes a limited guarantee over your parents' property to help you secure the loan to purchase your property. And it's not about boosting your borrowing power. You still need the income to be able to support the repayments. But what it does allow you to do is lend up to 100% of the purchase price of the property you're looking to buy, all without paying lenders' mortgage insurance. So here's a few things that surprise some people when we talk about guarantor loans. Your parents don't need to be working. They may even have a mortgage on the property. They just need to have a good amount of equity in the property to be able to use. And they're not liable for the full loan. It's a limited guarantee, which I'll explain a little bit later. Now, if something ever went wrong in this situation with the property you have purchased, the bank will go after your property first and sell that before they even talk about selling your parents' property. It's only when they can't recoup the funds that they need to satisfy their back pocket where they'll go after the limited guarantee. And as long as there is a good amount of trust between yourself and your parents, this situation shouldn't arise. And no, they're not locked in for the 30-year term that is your mortgage. That's something we're going to get onto a little bit later though. Now, if your parents have an unencumbered property, this is one thing they definitely need to know. They will need to then surrender their title to the bank of your choice. This can sometimes be a very emotional step for the parents because they've worked so long and hard to be able to pay off the mortgage, and they have that title up in their living room like a badge of honor. But as long as this conversation is had up front, you won't have this problem when it comes time. Also, they'll need to get independent legal advice from someone who is not involved in the transaction. So what I mean by that is, it can't be from a lawyer from the same firm as your conveyancer. So yes, this definitely needs to be treated seriously, but it's not the horror story that a lot of people make it out to be. Now remember when I said your parents aren't locked in for the full 30 years? Here's the part that are going to give your parents a little bit of comfort. This is generally a 3 to 5 year exercise. As the property grows in value and you pay down your loan, naturally, the ratio between the loan and the security will get to a point where they no longer need the guarantee. And then we are able to release that guarantee and your title back to your parents. So that's when any outstanding mortgage you have on your property and the value of your property meets an 80% loan to value ratio. So yes, there is definitely trust that is needed upfront between yourself and your parents, especially if your parents have worked so hard all their life to be able to own their home outright. So with the right plan, a clear exit strategy, and just a little bit of time, this can be the most efficient way for parents to be able to help you get into your first property without touching any of their cash, super, or investments. And again, if you use a mortgage broker for this, your parents will be guided the entire way through the process. And let's not forget, they're also receiving independent legal advice when it comes to signing those documents. So if you've been working hard, saving up as much as you can, and the market just keeps getting away from you, a guarantor loan might be your saving grace. And if you're a parent watching this, let me reiterate, this isn't you handing over cash to your children. This is you giving them a leg up in a market that is a lot harder to break into than it once used to be, all while staying protected with the right advice, strategy, and exit plan. And now, if you don't want to have the conversation with your parents, send them this video. I'm more than happy to have the conversation for you. This first conversation might set you on a path to be able to get into your first home a lot faster.